Well, good day to all of you traders. I trust you are all well. Welcome to this live trading profit session, Wednesdays with George. Today is just one of those beautiful Wednesdays, third Wednesday of the month. So for guys who are subscribed to the Wednesdays at the month, we are in the market. Looking for opportunities. I'm presently, just watching, looking for some selling opportunities, new K100, German 30, looking at some currencies, euro versus dollar, but I gotta wait. Nothing has set up as yet. I think we're still, ahead of any significant moves. It's kind of trading range price action, but we are going to get there. All right. So what I thought, because of the news that we had this week, quite a lot of news, and I thought I'll just look at a couple of things that have happened with news to assist you from a price action perspective, how to trade the news. So this is yesterday's chart pattern. So I have four slides I want to show you. And I've just called first two difficult patterns after red news. And difficult in the sense of you have one large candle range. So large one candle ranges and no follow through. So the FT stands for the follow through. So if you were in the market yesterday, UK 100, you can see this was my whole setup looking for possible opportunities to go short. But as you get into the news, I'm not in any trades at that stage, so I decided just to stay out. I'm not sure how anyone would have traded this unless you're the wide stop. Okay, so if I decided to go into the market, remember I said you always have two choices. Either you get out of the market. There are three red news announcements. So an hour and a half before, I decided to stay out. So either you stay out of the market, or you stay in, but you have a wide stop. That's the only way to trade it. So if you're going short, your stop would have had to be probably around and above this key level, the 8,000 level. This is on UK 100. Or if you're going long for whatever reason, you argued for yourself, still above high of yesterday, all-time high. That's why this is like a double green. One marked the all-time high before we got to the day, and the other one was the high of yesterday. So if you decided to take that, you'd have had to put your stop not at the open of the day, but find a technical level. So it's a US session, but even lower. But it's such a wide stop. I'm not sure why you'd want to do that. So best to let the news announcement go and then start to look at the information you get. So when you get large or any news candle, I'm always interested in what happens at the extreme of the news candle. And then the measured moves are going to have been way up there and way down there somewhere. That's where I'll be interested to jump in as the higher probability trades. As it turned out, we had a bear inside candle. So, the bears completely nullified whatever strength the bulls were trying to exhibit here. Bull candle, bear candle ended up as a doji candle. But if you're looking to say, well, I really want to jump in because this might set up a unique opportunity, remember, then you must wait, for at least 2-3 candles. So first candle, news candle closed, then the next candle gave you a bear inside candle, and you say, oh, okay, good for the bears. Let's see if there will be follow through. So we had a doji candle, very poor for the bears. Bulls tried to resume, the buying. Remember, there is a 10 EMA, failed breakout, and then we had a pullback and a failed breakout by the bulls above the EMA, which turned out into a bear high test candle, coming off all these light blue are levels of resistance on the daily time frame. So if you really had to take a trade within the trading range, that's why I'm calling it a difficult pattern. That's the trade you would take, because that's a normal kind of price action pattern to take. Bear breakout, pullback, and low one. You have to put your entry beneath here But if you're taking that, I mean, you got to decide whether you want to put your stop above there. But then if you're taking that trade, you're assuming that the bears will be strong enough to break beneath here and maybe give you a measured move. So that's a trade that you take, and then you have to manage it strictly. The same kind of pattern repeated itself. I mean, Hang Seng 50 was just, an even wider range compared to what had taken place in the day. But immediately after, bear breakout, inside bear candle, followed by a bear candle breakout, pullback again. That's the only trade you could take, because this is a pattern we trade if the conditions and the circumstances were right. I didn't jump in at all. I don't like trading in the middle of trading ranges, but I know some guys want to trade, after the news, possibly looking for a swing, trying to go for a one-to-one, or you just want to scalp in and out. Then euro versus dollar, we had some kind of situation when the market had just been going sideways. This little tool that you can see, I was doing a possible wedge count to see if I can get in early, but we just went sideways before the news, so I decided to stay out. Inside candle, breakout mode, breakout pullback, low one. You could take that trade if you're interested in that. We had something on the German 30 and also on the S&P 500. So trades would have taken, stop up here, very low probability trades. So at best, you're thinking as a scalper, because if we get down here and the market turns and you get a bull candle, which we did in some of them, you have to exit. You can't hold on because you've taken a pattern that hoping things would work, because this is just a huge trading range. The reason you're trading it is hoping to get a bit of a scalp and maybe get breakouts here for long. Yen, USD versus yen, different structure. There is, again, test of the high of yesterday. Try to test the low of yesterday a bit far off. Bull candle inside, same structure, but inverted bull breakout, pullback, I1. That is where you take the trade. Stop has to be here, and hopefully you get up there and break through. Now, those are difficult, pretty difficult, and I just stay out. I prefer a much easier life than forcing myself into trades. We had much earlier on other news breakouts. These are, I've just called this clear, easy or easier patterns after red news. Okay, and they are clear because you're getting reversals outside of the news candles range. So there is a news candle in this case. This was UK 100 again, but this is way back in January. Key level of resistance on the daily. So we had a huge sell-off, tail at the top, and then we had another bulls trying to accelerate up, and bulls trying to accelerate up and failed with a high test. That is a pattern that I like to trade. It's a combo pattern. Bull, low test, and high test. So you can take that trade, or alternatively wait for the next entry, which you got. So bear breakout, pullback, low one. That's a much better trade than what we're looking at. Stop is still above that extreme, but just from there to there, to get to test this low, you get at least more than one-to-one. Then with a wedge bottom, get out of it and find ways to get up and find other opportunities. But this would have been a much easier opportunity for you to jump in and trade. Now, the reason I've shown this as well, let me show you the other one, then we have a quick discussion. So the other one was euro versus dollar. And interesting enough, the euro versus dollar, this was the news at 3:30 my time, so that would have been 9:30 Singapore time, an hour before the New York Stock Exchange opens. So there was the open of the New York Stock Exchange. Now, interesting here, it was like a couple of news announcements. So when you're coming in, you've spent there's many other opportunities you could have traded here. So that was not the point. The point was to see the mindset getting into the news. You'd have seen nested wedges. Remember, I speak of a nest, patterns within patterns, confirming for you that the bears are building up a pattern for them to sell off. So there was the first wedge here. Okay, tried to break out above that wedge, failed. There was an opportunity for you to have shorted. And then there was another huge wedge here going into this news announcement. So you get nested wedges. And what's a wedge? 3 attempts by the market to get above a certain level. There's double tops and lower highs in there, all confirming that the bears are strong. But at the news announcement, we had a perfect test, which created this line here, failed breakout in that, which creates a wedge top. So remember, when you see a pattern, I always say, see the pattern, then wait to look for the entry. Just like, on UK 100 presently and German 30, I'm waiting for a lower high to see if it sets up. Then we had the news announcement, and of course, you're not in the market, but you're waiting to see what happens. Big bear candle, double bottom, and we came up and again testing the high of yesterday, double top. You could have jumped into that, but you're going straight into the open of the New York Stock Exchange. So might as well wait a little bit. Bulls tried to reverse the market, failed. Now, after all of this, and having not taken this trade because of the market opening, you could have taken this trade if you wanted to. But if you did that, you need to put a measured move stop. But if you wait and you get that 2-bar reversal, failed breakout high of yesterday, and that you can take that trade, just put your stop here. If you don't want to take that trade, say, hey, I'd rather wait a little bit. The market is opening. Who knows, the bulls might come back. When you see this, you have to take that. But all of this is influenced, by the news, and importantly, all the patterns that took place that were set up for you, before the news. Key point that I want to just mention: it's worthwhile to wait. If these are setting up, in the limited time that you have, by all means take them. But be aware. Remember, we spoke about craftsmanship trading in the course last week. Be aware of possible wedges being set up. So if you're taking trades and the market reverses, get out of the trade. You take this short and you get this kind of reversal candle. It's a beautiful one. It's a higher low. Don't deny the fact. Get out of it. So you will get in and out, and make a little bit of money, but you will be rewarded at some point later on as the day unfolds. So here are the things with news. There's still a few more announcements, and depending on what markets you trade in, if there's one news announcement, stay out of the market unless you are prepared to put a wide stop and take the chance. 2 news announcements, doesn't matter. Like yesterday, it was all US CPI month on month, year on year, quarter on quarter, whatever. Just count each one separately, because there's all these forces that come into the market just to trade before the news and after the news. And then things will settle down and patterns become clearer. And if you wait, you will get rewarded. So those are the thoughts for now. This is how I trade news. I want to really see what's taking place beforehand. Then I wait for the news announcement, and then I decide whether to jump in or not. With the difficult patterns, or what I call difficult in this case, where everything is happening within the huge candle, it's a trading range. The best place to trade with a higher probability in the trading range is selling at the top. That's the best price to sell and make some profit on the way in, or buying at the bottom if you get a wedge bottom, etc. In the middle, you're really trying to take a chance. That's why this is important. Trading range, LPT, low probability trade small risk, which is for me would be 0.25%. That's my small risk, but using the appropriate stop. So don't put 0.25% and then work it out here. That's like trading 0.5%. That's just not wise. All right, guys, thank you very much for joining me for the 15-minute punchy show, live trading profits. If you are in Wednesdays at the market, we will see you in 3.5 hours time when we get into the US Open. Take care, guys. Marlon in the office, thank you very much, buddy, for hosting us. Cheers, everybody, and bye-bye.